I have 1 million rand sitting in my account. I'm about to buy this property using my cash.
Or even better, I've got 1 million in credit and I'm about to buy my property using credit.
Who's right? So I'm super excited about today's conversation that we are actually speaking about, should I actually invest using credit or should I actually invest using cash?
I mean, we're so biased that we love property investing. However, at the same time, we cannot ignore the importance of credit. Hope to see you guys in our live on Instagram so that we can have a discussion more about credit.
So now the reason why I love credit is that it goes so well when you're looking at property investing, right? This now gives you leverage to actually buy this particular property and pay it off through multiple months, right? So now let's look at a particular property, or let's not even look at a property, let's look at a business, right? Let's say I'm actually going to use my credit to book out a venue for doing our live events, right? I may make money or I may not make money in that particular setup. So now when I'm looking at property investing, I know that if I did actually run my numbers correctly, I know that if I actually chose the right property that will actually bring the correct cash flow, I would actually be making money and I don't need to think about it that will I or will I not make money on this particular property.
And what I really love about credit is that it gives us the opportunity to invest in property. If you do not have that 2 million or 3 million to start investing in property. So what am I saying when I'm saying that? I'm basically saying that it's very important to understand that if I'll be using credit to invest in property, I cannot be saying that I'm not going to get any credit card, or just as we have been speaking about during the week, I cannot be focusing on credit only when I'm about to start investing. Then I'm going to start focusing on what is credit. So it's very important that the more you actually focus on credit and building that score is the better rates that you will be charged. So the less you will be paying. So that actually means that we don't have to wait to save until 10 million. There is another opportunity. However, we need to be critically aware of that. If there is such an opportunity, how do I position myself before I even start working?
Most definitely. So now I don't want to hype you so much that you are actually just going to be buying any property on credit. When you are actually going to be using credit to actually invest in a property, you then need to know what you're doing in that particular property. Yeah. What I mean about this is that, say for instance, someone wants to go into flipping a property and they're going to be using credit. If you do not understand how to actually run the numbers, how to negotiate the best price for that particular deal, how to fix that particular property in a manner whereby it is actually going to be sellable to the next buyer, then you are going to be left in a situation whereby you are going to be owing the bank to pay the balance between what you actually asked from them and what you got from that particular sale. So now if you are actually going to be taking the credit route, make sure that you know what you're actually doing.
It's one thing to gamble with your money in terms of I've got my 1 million, I'm putting it in this property hoping that I'll get returns. It's another thing gambling with credit.
So I remember the last when we were asking for money for us to actually build or fix this particular property, and now we got to a point whereby we had all of this money. However, we were thinking that sure, I'm used to actually investing with my own money. Now I need to actually add other people's money and they need to get paid as soon as possible. So crossing fingers that this one actually works.
Yeah, and I mean, at the end of the day, especially when it comes to that, when you're using other people's money, we need to be discussing the brutality of you paying back those people, whether it's your credit facilities or you ask from somebody else, because once you start defaulting, it's actually going to come back to you as an investor that you are going to want to get into more deals. So once you start not paying those people back, it will be a problem. And then again, when you get money from others, let's just say you're using credit in terms of other people's money, you should understand. That's the thing about property investing, is that if I'm promising Lebo that he's going to get 20%, I need to know for sure, have run my numbers, that it makes sense that I will be paying Lebo and 5 other and 5 other people who invested in me at 20%, and then I'll be getting X amount, so that you don't get in a situation whereby, let's say that I bought the property below market value at 500,000, sold it at 700,000. Now I see that the problem is with property investing, I can't reverse, so I can't say I'm going to work more. So now I'm sitting, I sold the property, I can see that I can only give all my investors back at 10%. Now that already does put me at a disadvantage. So as much as we like speaking about other people's money, let us run numbers in terms of how do I include the interest that I'll be paying to other people, or how do I pay back the bank? And don't forget the rules again, guys. If you are taking other people's money, you need to know the South African rules when it comes to that, because you don't want to be you don't want to be found wanting when it comes to the law.
Most definitely. So now let's look at the cash situation. If you have this 1 million and you are saying that you would actually like to buy a property in cash because you do not actually want to deal with this whole credit game, that might be fine. However, you need to understand the implications towards that, right? So now we need to understand the tax implications towards that. Make sure that you are if you are actually going to be using hard cash to actually invest in a property and you're not going to be using any sort of credit, make sure that you do have a qualified accountant to actually direct you in terms of what should you do in terms of buying that particular property and what should you not do in terms of buying that particular property. This is the reason why I'm saying that you need an accountant, right? So now say for instance, you have this 1 million and you invested it into this particular property. And now with this property, it gave you returns of 50%. I know I love 50%, but indulge me for a while. You're looking at a 50% return on investment. That means that you get 500,000 back in profit. So now when you're looking at this 500,000, now the tax law is actually going to beat you up in terms of that 500,000 if you didn't actually go and consult with your particular chartered accountant or your registered accountant. So now if you are actually going to be looking at investing in property using an accountant, especially in a cash deal, make sure that you're using an accountant that knows what they're doing for you to actually get a lower tax bill.
As the thing, what I also like about credit is that it exposes the type of deal that I'm in, whether it's a good situation or bad. Let me give you a practical example. Why am I saying that? Let's say I bought the property 100% bond. So I was excited that, guys, I didn't put any money down. I got the property. I'm a landlord. I've got tenants. And now only to find out that with all my expenses, considering all my expenses, I still need to take out money from my pocket. Now that credit situation actually exposed the type of deal that I'm in, because now I need to be taking more money out of from my pocket. Some people say that they do not mind being in such a situation. We're having a live this week, Saturday. I'd really like to have a discussion with you guys that why would you want to be in a situation whereby you're not gaining anything at that point in time versus a situation whereby there's a possibility you could be getting cash flow? So a conversation about that will be cool. So let's get back to the topic. So from my point of view is that if I'm not getting that money right now in terms of cash flow positive, that actually qualifies that deal as a bad deal according to me. So credit does actually expose it to that extent of how much interest am I getting, how much return on investment will I be getting. Whereas with cash, it's actually a bit difficult if you don't know what you're doing, how to cap it. Am I really making a lot of money in terms of good returns from the property? Because if you buy it cash, essentially what's happening is that you'll be getting money to you. Now, how do you actually gauge that it was a good buy?
So now, if you are looking at that particular situation and you're asking yourself, should I go the credit route or should I go the cash route? Before you make that decision, make sure that you do actually send us a comment on Calendly and let's have a conversation between ourselves and you. And let's see that is there a way of actually making the system better for you to actually be able to actually move on to your next property in a faster pace.
Hope that you guys got a whole lot of credit on that topic about credit, and let us see you tomorrow.
Cheers.
Invest like a pro and take care of your credit.